You're welcome. So happy to be here. Wow, we have a lot of people today. It seems that this topic of myths and misconceptions in co-living is really interesting. Well, nice to meet you all. I am Clara Rollave. I'm gonna do a couple of in the meantime, please type in the comments where are you calling from or where are you coming from today. And I'm gonna do something I have never done before. So in the meantime, two things. I'm gonna stream this call in LinkedIn and YouTube at the same time. So bear with me with the technical part. Can you hear me all okay? And I'm gonna raffle half an hour consulting with me, which is $500 value, to the person that can guess or is closer to identify what are the 5 biggest myths and misconceptions in co-living. So please in the comments, type in the comments, where are you coming from today? I know I have people from Florida that I have seen before. I have people from Massachusetts. Hi. And if you're new here, also just type in the comments, where are you coming from? I am so happy that you're here. I hope that you're going to learn a lot today. So let me get started with the streaming part. In the meantime, bear with me for 1 minute. Please tell me in the comments, where are you coming from? Hi, Pamela. Oh, nice. You know, Buffalo is great for co-living, by the way. That's what I learned lately, that Buffalo is really, really good for co-living. So I am going to use, in the meantime, please booking your, I'm going to share a screen for this just for 1 second. Book your time or book your, share system audio, yes. Book your calendar for March 5th, Thursday, okay? Why? March 1st, put this in your calendar. March 1st, National New Hampshire, if you are near the area, we're going to have an event launch with the president of Passplit in National New Hampshire. It's going to be a tremendous event. I like for everybody to be there. If you can come, I'm like super happy to have you. Right now, oh, amazing. Hey, oh, Georgia, amazing. Pamela, hi, Boston. Thank you for letting me know that I was muted. I was not looking at these. Can someone let me know if I'm streaming actually in Facebook and YouTube? This is a new test that I'm doing. So new share. Let me see. Okay. All right. And in the meantime, let me see. Okay. So, before we begin, some little news. News share. Some little news. As always. I see. You can see this one. Maybe not. If in the meantime, entire screen, comment, there you go. News. What's going on in the co-living world? This is a great thing for you guys to know. Look at this beautiful building. Can you see this beautiful building? Yes, no? Type in the comments. No. Okay, I don't think this is going to work. I'm not going to do that. This is in Houston. So this is a 10-bedroom, 10-bathroom property done in 5,000 square feet in Houston, purposely what is called co-living purpose built. I went personally to visit the property. It's absolutely incredible. Why? Because if you have been here before, you know I'm all about the 3 C's of co-living. Can someone tell me about what the 3 C's of co-living are? Can someone tell me what the 3 C's of co-living are? Okay. Don't someone remember what the 3 C's of co-living are? No? Okay. Nelson, we have some people in the waiting room. Let's make it all. Okay. Perfect. So this is absolutely stunning work. Let's go first to Houston. This is a 10-bedroom, 10-bathroom. Look at the common areas. Look at the quality of this work. Look at the even design, design living room, design rooms. So the rooms were made, the whole product was made having design mind shift on time in mind. Like, look at that. So there are 10 in this property. There are 10 private bedrooms with 10 private bathrooms. Construction cost in Texas is not the same as in the rest of the country, of course. And this company has built, I think, more than 12 right now, and they are all more than 95% occupied. So what does that mean? Not only the demand for Houston is important, but the new co-living product, there is demand for new co-living product, and it's demand for new co-living product actually everywhere. And we can go more about that in the details coming soon. So about me, who is this person that is talking to you today? And let's start, if you're new here, let's start. What are the 3 C's of co-living? What are the 3 C's of co-living? The 3 C's of co-living are cost, community, and convenience. And why is that? Any product needs to have a balance, correct? When you have a product. So think about this as a product that is going to scale. And you need to have a good balance of product, meaning the price, your acquisition price as an investor, right? Also, your end price for your client, your end client, your resident, your community member. No, so it has to be balanced, okay? So it has to be good for both of you. Number 2, the second C is community. Loneliness is one of the most important factors, and we're going to talk about this later on. It's one of the most important factors why people choose to be in community or don't be by themselves, even though sometimes they can afford it. You, as an investor, have to create a space for co-living, for community, people that can say good morning to each other. What are you doing? Create a space for them to be aligned. And number 3, on a space for them to create friendships. The more community, and this is data actually that Passive is working on, and I know this, for a fact, is that when you have a community, residents stay longer. So it is good for you as an investor that you have community in your spaces. And number 3, convenience, meaning the product that you create, as this product that I just show in the Houston market, is very convenient because they thought about every detail in the house, in the kitchen, in the room. Nothing is missing. And it is so good that the occupancy and the time not only to fill out, to stabilize the property is really close, but also people want to stay because nothing is missing. So when you have a product like that, you will have a balance in a successful product. And always think about your residents as human beings, not as a dollar signs. And now, who is Clara? A little bit about me. This is me. Oh my God, 10 years ago. 10 years ago, 40 pounds ago, presenting about co-living. I had one of the first co-living companies here in the Boston area. I was doing arbitrage. If you know what arbitrage is, say yes. If you don't know what arbitrage is, please type no in the comments or type arbitrage, because that helped me create later on an arbitrage product, an arbitrage class for you. Okay, number 1. Number 2, I created from 2 properties in arbitrage here in Boston area to $42 million in assets under management in less than 18 months of work. And I had a $2 million year in sales with this portfolio. We did really well. I acquired a competitor. I have about 5 employees, 17 subcontractors, a business partner. And when COVID came, I have to restructure the whole company. Restructure the whole company, and I went back to the drawing table. So back to the unemployment, request unemployment, and I start from zero. But what I start from zero gives me is the ability to be with you here today. I became one of the most sought after co-living coaches in the country. Thank you, everybody, for having me in all your conferences. More conferences to come. I'm speaking with with Sam, with Pace, with Grant, and they come here frequently. So that allows me not only to give you advice in what to do, but also what not to do, because I already lived it, right? So that's what we're here today. And again, remember, book your calendars if you are in the New England area. Come March 5th, it's a Thursday, in Nashua, New Hampshire. Location and the guest invites will be here to follow. Great. Oh, wow, we have a lot of people today. I'm loving it. What do you think the biggest misconception of co-living is? And what are myth and misconceptions? And this is what happens a lot of the time. Let me see. Is that, and also invite you to, in the meantime, while I prepare this, I invite you to join I created a new Facebook group. I invite you all to join whenever you have a minute. It's called Coliving Capital Group in Facebook. So find the Facebook group, Coliving Capital Group, and please join it. I will put a link later on in the comments. Or if Nelson, if you can put a link in the comments, I appreciate that. Okay. So what are myths and misconceptions in co-living? Myths and misconceptions are what people sometimes think that, are myths that are not true, meaning ideas, ideas when you start doing what I've been called, this co-living thing. Someone called me, Clara, you are in this co-living thing. Yeah. What do you mean by that? There is so little information in the country about co-living that when someone come to my office or get a consult with me, I have to start from scratch. And what does that mean is that is a lot of lack of knowledge and free knowledge, like we're doing here right now, about what co-living really is and how co-living really works. And no question is small, no question is silly, no question is looking off from pond. So I'm going to do like what time it is, 17. I'm going to do about a 15, 20-minute presentation. And at the end, please raise your hand and we can go on all your questions. Sounds good? So to begin with, in the United States, the co-living market is about $40 billion market, okay? And it's really a big opportunity. And it's a big opportunity for a lot of financial moments in the market, between what young people can make, between student loans versus what is the minimum wage, versus the cost of construction, the cost of housing, interest rates. There is not a better moment, or there has not been, well, maybe 10 years ago, there is not a better moment for your career right now than co-living right now. And there's no better product or no better real estate product that gives us more sustained, higher returns than co-living. So, but when people come to me, they always, and this is the top questions that I have of the top misconceptions that I had, and the more that I explain. So feel free to talk about it, and feel free to ask me questions at the end, okay? So number one, what kills capital, number one, is believing that you only can do this in single families, meaning 6-bedroom or more, and then that's it. That's nothing forward for the truth. Or that I'm gonna go one by one. Or that co-living is just glorifying rooming housing. Nothing that is not correct as well. Or that the demographic is just broke millennials or people that are not what they call low quality tenants, and that really is not true at all. And I'll go more later on. And I did a whole podcast in this, but I'm gonna go more with data that blue states that you only can do co-living in red states, never in blue states. And I'll have you and show you the data. What is that in a myth that is not correct? Okay. And another myth is that the operations of co-living are so complex that the margin is erased, and that is also not correct. It's one of the very big myths as well. So I'm here. You know very well that I am a very data-oriented person. I'm all about numbers. So let's start with the facts, shall we? Number one, co-living only means single-family homes, big single-family homes to make returns. That no, no longer is not true. And let me tell you, and you know why that has happened? Why people think that co-living is only single families? Can someone, take a guess why you think that is? No one? Single guess? Okay. Single guess is that half of the country has a lot of single family homes, correct? But also because that's what Pascal promoted the most as the role in lead generation source. But that is not correct. Why? Because co-living works in all asset classes, even from a small, as long as you have an asset class and the acquisition price is low, you can make it work. And when you scale from 4 bedrooms and plus to duplexes and triplexes, we do in Massachusetts, we do multifamilies that are a triplex, correct? And those are multifamilies, correct? So we can do in certain areas, single families, but there are plenty of multifamily assets in co-living across the whole country, and plenty of large scale, high premium large buildings that are not even lower income communities, that are luxury communities. So you can make co-living work in all types of asset classes. So expand. I'm here to help you expand your thoughts and your thinking. Do not believe that it's only in certain areas. You need to look at the numbers really close to decide where and how you're going to apply your investment criteria. And again, and this is an example. Someone called me, can you do a single family in Massachusetts? Absolutely not. But can you do multifamily in Massachusetts? Absolutely yes. But that's not the example, let's say, in Georgia, because Georgia has a lot of single family homes that are very large, 1,500 to 1,700 square feet. And you can really, with a very nice renovation, you can make a really beautiful community, a beautiful co-living product there. And I've seen, let me see if I can show one in the comments. Let me show you a very simple, hold on. I'm going to show you, and I'm looking for the link. There you go. Let me see. I see a photo. There you go. Look at the photo, images. Okay, I'm going to share my screen and deviate from the class for 1 second for you to understand that this is a national asset class, not a different, not only single family class. Okay. This is a building called The Reserve in New York, in Manhattan, Upper Manhattan, almost I think, Upper Manhattan. It has about 150 co-living rooms. This is the building. And the rooms start like $1,600 or more. And it's private, all private co-living rooms. So monthly costs are all included, internet, co-working, gym. And you can see, and they're all 3 bedrooms, 4 bedrooms. Let me see if I see the amenities, and let me see if I will let me see what they have. See, can you see the floor plans here? 1, 2, 3, 4 in a large building. So yes, it can work. It's a different type of asset class, correct? It's a different type of capital, but yes, it works. And my friends here in Rooftop, if you need co-living in Boston, this is one of the biggest, nicest players. They do what I can call multifamily co-living, which is what we call triplexes here. And they do all furnished rooms, very high quality renovation, and from 1,100 to 1,500. And look at the class. It's really nice, as you can see. I know these prices is not what you see in all areas of the neck of the woods, but if you look at the buildings, they do this type of buildings. See, 1, 2, 3, 1, 2, 3. So triplexes. And in this triplex, what do they do? Or we call it triple deckers. We don't call it triplex. I call it triplex. So if you are not from the area, it's not as much as lingo. And they do what? They do from here, you can do from 9 bedrooms to 12 bedrooms even. So doing 12 bedrooms is better than doing 2 small single family homes, isn't it? So it works. It works in regular multifamilies, or what I can call multifamilies, in working luxury, and it works in single family homes. So going back to my sharing, and let me know if this is helpful. I think you're going to learn a lot today. Sorry, that's not what I wanted to share. Sorry. Happened with my Canva. Window Canva. Does this text make sense for you? Is it clear? All right, let me stop share for a second. I need to find my presentation. There you go. Disappear for a minute. Okay, there you go. Here it is. Okay, so that's misconception number 1. It does not only work in single family. Got it? All right. Number 2, that co-living is glorified rooming houses, or glorified for tenants that cannot afford studios. Meaning, and there is 2, I'm going to give you a twofer. This is 2 in 1 meets that I'm going to go for it. Number 1, a rooming house or that just glorified roommates is kind of by accident. They find a room in Craigslist. They don't know who the roommates are. you don't know how the quality of the furniture is. You sometimes don't know what is included, or who handles maintenance. They are not intentional to live together. It just happens for whatever reason. So what you expect from the property, the other person cannot respect, and you don't know how to organize the cleaning with a roommate you don't know. So it's a lot of disorganization. Correct? It's just like, it's like a throw a rock in the water and see it floats. Meaning you don't know when you have accidental roommates, as or what they call glorified roommate, if it's gonna work or not. Sometimes yes, sometimes does not. Professional co-living is a product that scales, and you need to define how you're going to create a product that scales from the beginning, meaning the quality of the product, the quality of the building, the quality of the room, the quality of the house, how you curating a place that people like as a community, from the design of the shared living spaces, that the design, the product that you can scale, what they do is they create more. Hey, you know what? As a client, as an intentional person, I align with that product. I want to live there. And you create a brand, you create a style, and then you want to live there. Same as these people in Houston, certain very multi-owners in Passplit. They create a brand, they create certain colors, they create certain quality or status that say, hey, you know what? No matter where I am, I'm going to find this house, or I'm going to find this quality product. I'm going to be there. It's not an accident. It's not glorified roommates, because that is accidental. There is no control. There is, just chaos. Or professional co-living. If you're a serious investor, if you're not a serious investor, then I will get it. Or if you're serious in this and you want to scale your portfolio, in the goal to achieve freedom, you need to think about everything in how it's going to scale, and what are the shared living values in everybody that is there, right? In how you're going to attract like-minded individuals that are going to enjoy living there. So you have very good communication, very good standards, very good, everything really good. So when you start standardizing your product, that's one of the biggest difference and one of the biggest myths. So you can slap that one out of the bat, okay? This one I laugh one a lot. The blue state versus red states. Oh, please. I was saying, give me a break. And this is why. And it's very simple. The areas with highest demand for co-living is the areas when people go to work, go to study, Massachusetts, New York, San Francisco, LA, you name it. And, but they are, tenant-friendly jurisdiction. Yeah, correct. But they also are more qualified tenants that pay more for a place than someone in a red state. In a red state, the average rent, and I put the numbers here, can you see this? Let me see. Okay, can you see this better? Correct. So I did this comparison for you, so you understand. In any blue state, people pay, and in many of my properties, $1,200, $1,800, things like that. When you go to a red state, you get $650, $850, and the eviction is high, and the eviction is in blue state is low, but the quality tenants, or the the majority of people in this area, okay, they are here for a reason. They are the study, they are working, they're young professionals, or anywhere you want to work. In real estate, they are geared to more different type of client, and the type of client is also completely different in a way. The tenant quality is different, but you have to really underwrite that well versus the one in blue states. So if you're a really good operator that underwrite and analyze every client that goes to your properties, the eviction rate in either Massachusetts or a red state should be less, should be minimal. But it's more than 5% in red states versus less than 5% in blue states. So when someone comes, so you get what you pay for. Yeah, you want a cheaper rooms, you want a lower income, yeah, that's what you're gonna get. But if you are in a different state and you're open to invest in a blue state, you're gonna get higher quality tenants for different reasons, and the tenant pool is a little more robust than in other ones. So that is I hear people, oh no, but I only can, my mentor told me only to invest in real estate. I'm like, it depends. It's not all investment, all asset classes are not the same. Certain investment criteria work more in one state than other. But for co-living comparison, that's what we're here today talking about. For co-living comparison, the blue rate just doesn't work. I can debate that all day long. Are we good so far? Are we good so far? Any questions so far? I want to know if this is valuable for you. So I don't see any of these in the comments. Hola. All right. So let's continue. All right. I'm going to do multi-speaker. I want to see everybody. View, speaker view, gallery view. Okay. All right. Let's continue. Number 4. Oh, please. I feel like I have too much coffee and I'm a little emotional about this, but like in a good way. I met a new investor from New York 2 weeks ago, and we were talking about investing in Florida, co-living in Florida. And they came to me, Clara, we cannot do co-living because we have heard, listen, that we have heard that co-living is only for low quality people. Were they right or not? What do you think? Type it in the comments. Please type it in the comments. Are they right about this or not? Exactly. No, wrong to the core. Like, are you kidding me right now? No, so sorry, I have to laugh, but don't tell them that I laugh because no. Why? Can you someone tell me no that because they're low quality people, they destroy the asset or they destroy the house? Can you believe that? Can, and those are myths, like they're myths that please help me take care of this because it's absolutely not correct. Okay. You build the product as co-living owner, as co-living operator, you build the product that attract the tenant and the resident that you want. Okay, let's start that way. And you are the one who decides who to have in your property, no one else's. Doing what? Doing the numbers based on data. Okay. What you mean that when you do that, you know what happens? And I'm going to be very respectful. You're not doing your homework right. When you do that and you get your results, you mean you're not doing your homework right in some way lazy. You get the property, put it in there, and sign an agreement and then let other people do the work. You need to do the work because it's your business. Your business. Okay. You need to learn how to underwrite. You don't have a screening criteria for your resident. How do you screen in your residents? So, are you gonna accept everybody that comes in, not knowing if they have a proof of income or not? No. Or you just compete with everybody and put the lowest price until it's filled, and that's what you want? Absolutely not. Or you don't have a curation in the times of what you want to do for your community, for your house, and you just don't care. So you get what you pay for. You get what you do for. People get, and if you don't have a space for community, people don't want to live in a space. They want to say hi to each other. You get what you pay for. People leave because I don't want to be there. No one wants to be in a place that is no interaction or quality of people, quality of life. Okay. Once you start doing what? Doing better underwriting in your properties. Having rigorous standards when you qualify people. Don't let use another platform, another lead acquisition form do the screening for you. You need to do a screening too. Okay. But you can also create a product that attracts that people based on the location, based on the price, many things. Okay. And premium positioning, intentional community. That is way improve things so much better. And I'm going to give you examples. All right. I would say, Evan, yes. I'm going to do just quick example in why this is not correct. Okay. And please copy this if you like, take a screenshot if you like. That's what I'm here for, to give value to everybody. Comment. Pa para pa pa. Ha ha. Pa para pa pa. What is it? Look at this. This is, again, I could have chosen San Francisco, Boston, LA, anything. I just went to New York because my neighbors. He's at a company called Cohabs. They come from Europe. You know what they do? Look at the price per unit, 1,800. You think what they call low quality people or past people or can live in this place? Look at this. They grab industrial and residential and make it 16 bedrooms, 17 bedrooms. Look at that, beautiful. Per unit, look at that. Shared bathrooms also. intentional community, intentional design. Here there are 3 units. Look at this. They have lockers, as you can see. Have you seen something like this? Look, the whole house is a co-living. What type of resident you think you're gonna have here? With all due respect to everybody. So please help me expand the word about and educate people believing that this is all for low. No, neither PassSplit as a lead generation platform is dedicated to. I know they're dedicated to help more people that are in the lower income, but now they have products for all types, for all classes. Okay, and also when you start curating your product, and I'm gonna share this stuff right now, you can create community that are for your client that you're happy with. Someone asked me, do you know people working only with veterans? And I will find 2 people only working with veterans. In this platform, which is called coliving.com, they're based mostly in Europe. They're an aggregator of platforms. So they have co-living for seniors across the country. So seniors, Cuba, Spain, Colombia, anyway, they are co-living for anywhere, any type of community that you want to create. For, look, 60 type of communities they have in their platform. For architects, for creatives, for bloggers, for athletes, for DJs, for digital nomads, for healthcare professionals, grow hackers, lawyers, you name it, skiers, I guess, in the mountains, sales professionals, startups. So co-living for young professionals, 2,300 across the world, or for women only, or everything. So these are not $10 co-living, okay? There are all sorts of prices across everywhere in the world. So Bali for $1,200. Do you want to go to Bali for $1,200? Look at that. See, co-living, apartment, co-working, co-living in Bali. Look at that. Sounds good to me. This is a co-living in Bali. Okay, there you go. 38 bedrooms, 38 baths, 76 residents, minimum 1 month. Down for Bali. Okay. What does that say? Please, don't believe the myth again. That co-living is only for low quality people. That reflects you as an investor. That reflects the experience of someone that is not doing the work. Okay, that's pretty much what it is. And Rachel and my operational company, now we are well experienced in vetting residents. We can have a whole class in what to do in vetting residents. If that's what you like, tell me what you want to know, and type it in the comments. All right. So far so good. We're good on time. Number 5. This is so complex, that it requires so much handholding or requires so much management that the margins are gone, the returns are gone. No. Sorry, I'm laughing because those come from people that usually have done 2 properties, or have not done this long enough, or have not learned how to scale in a way that is long-term thinking and long-term vision. 2 properties they're exhausted because they have 2 properties and they don't know how to scale, or no one teaches how to scale. And that's what I'm here for, to teach you how to scale, how to use data and numbers to have a portfolio that works well, right? So that means that your economics and your unit economics are not working well. Meaning 1 property is 5 residents, 6 residents, any amount of residents, okay? So you have lease cycles, correct? You have self-management cultures. There are many ways to do management, many ways. I have one, my friend Grant, he encouraged them to do a lot of self-cleaning, self-management. Some others want to take care of the management. Some others want to, send them pizzas and turkeys in part of the community. And they even encourage the some residents to fill vacancies by bringing friends and paying referral fees. Where you create a system that you're happy with, in a community and something that you can scale that you're happy with, then you have way less turnover, but also less operational risk. So not number 1. Once you have a system that how you can scale, then the standardized resident screening the automated rent collection, a protocol for maintenance, either in any platform that you want, a protocol for communications and maintenance, clear enforcement of house rules and clear enforcement of the house period, the community, and good communication, community communication, leadership a little bit, and very good tracking or your returns or your revenue, financial tracking. You have something that you can scale. You cannot scale it, you are disorganized. That's pretty much what it is. So if you learn how to scale, and you think when you start with a house that how many are going to have 10, 15 to reach the number I'm looking for, you need to think about what is the strategy to scale, right? That's clear, and that's what it is. So all of this, and I've seen this many times, all these myths have one thing in common. You know what it is? It's simple. It's fear. It's fear. They're based on, those communications are based on fear. Either something I'm going to do from now on is not bring nor allow AI to be in my classes. Fear of having the wrong product or the wrong asset, meaning the wrong house, the wrong property, fear of having the wrong one, all right? Fear of the tenants, fear of the demographic, fear of the regulatory environment, What do I mean by that? How do I get away with X and Y? That's the wrong strategy and the wrong approach. You're not doing this for getting away with. You're doing this to help, and it's better you work upfront with things that work in your area than against. Your fear of operational burden because you're not prepared, okay? And fear of market timing. There is saturation in this market, the saturation in the other market, we're too late. No, neither. The demand is still very strong. What are the real risks? What we're talking about? It's not the eviction. It's not the eviction of what the eviction is going to cost you, or the tenant, or all of that. Is risking your capital, your money, based on other people's beliefs that you have not done your homework, you have not executed and worked with the people that know how to scale to capture a share of the $40 billion market that we're talking about. The ones that we're doing now well, investors that are working now very well, it's not that they're more smart. Is that they cut out all these myths, and start executing really based on data. And they have a very strict, and this is for all of them, very strict, Nelson, still more people. Oh, wow, still many people. They have a very strict asset class, a very strict buy box, and they just repeat the systems. Once you know what your system is, you can repeat the system and just repeat and execute correctly. Okay, so that's what I'm here for. Let me see. Okay, why all this matters, and let me ask you why. Hey, first, again, this is me. Nice to meet you. I don't know how many properties I have underwritten in my career, more than $500 million for sure. I passed that number a long time ago. Yes. And I advised more than 80 million in portfolios. Also, that number passed 10 years in Coliving. Yeah, I'm an OG. Grant Chipman from the Coliving Conference called me one of the OGs in Coliving. I have incredible relationships with everybody, but I'm agnostic, meaning I'm not married to anybody in particular, platform-wise, operator-wise. No, I am independent, okay? And I am numbers-driven, not a high person, but a serious person. And my approach to real estate and to investment is scalability, but seriously doing it right. So again, I see one works, what marketing works, and what people miss, and that's just like that. So before we have people in the waiting room, okay. Before we finish today, I'm gonna offer a few things. So don't leave money on the table because of fears or what other people say. No, please don't do that. So I'm gonna offer you a couple of things before we leave. Number one, join my Facebook group. I put it in the comments. I'm gonna stop sharing right now, and I'm gonna raffle or the person that make the best question. I'm gonna give him a half an hour consulting call for free. How does that sound? So what can you do? So number one, I have an underwriting model, an underwriting book that I give for free. Anybody, I can send the link later on. I have a 90-day coaching program that helps you start in your pack in 90 days. Those are 12 calls. So if you're interested in that, just also, get back to me or email. Let me see if I have a link to my calendar. Let me see. Yeah, use this. Book 15 minutes with me. If you want personalized coaching, or you want to start the 90-day accelerator, if you want to access deal flow that works, that is better, also 15 minutes with me. And now I'm here to answer your questions. If you want anything else that I can help you with, and thank you for joining me this beautiful Friday. Stop share. All right, let's go. Who has questions? Raise your hand. Thank you, Elizabeth. Good to see you. How's life? All right. Evan says, are there many property managers who know how to manage co-living? Yes. It depends. So, Evan, depends where your portfolio is located. And sometimes you have to train, and what I have seen many times is you have to train the property manager in how to do it. But the incentive for the property manager is that they get paid a little bit more because the revenue increases, so they get a little incentive. But anyway, many of this is automated. But you need to create and understand what automation you're going to put in place as you scale. You understand? That's pretty much what we need at this point. But yes, to scale a portfolio, you need to understand a couple things, I believe, is how many properties you have that you can manage, that you're comfortable with. And what is the moment that time that you use management in doing management needs to step aside that you're missing for bringing more properties. Make sense? And that's the moment you realize, usually after 10, 15 properties, like, a lot of time managing and not searching more properties, that's when you have someone part-time, full-time, anyway. Thank you, Rod. Here for you. Does anybody have any question? I don't see anybody raise their hand. Does anybody want to raise their hand? No? Yes? Or this was so good that, I answered everybody's questions right off the bat. Gotta pat me. Does anybody has any questions? Do you want to see more co-living places across the world? And please also join me in March. Next Friday, we're going to have a session about private money lending with Tina Boyd and how to really understand how to use private money lending correctly. So that's going to be amazing. In the comments right now, you're going to see the link to our Facebook group. Is something that I'm doing, starting new. Please join my Facebook group. I'm going to draw new stuff in there. You're going to be first to many other things. Okay, Rod, depends where is the house located. Where is the house located, Rod? In Texas. You have two ways to do it in Texas. Again, this is not legal advice. This is not financial advice. But you should do two leases. One lease, which is the regular, share housing lease that is very popular around there. You can do that one and have the resident only being responsible for his room and his part of the common areas. And based on the property, certain states, certain counties require a whole house lease. If you are actively managing just this house, you can just do with the rooming house, with the rooming lease. You shouldn't need anything else, unless you are working with another provider that will lease the whole place for you and then sublease. So it depends. Also, you're doing arbitrage. Is someone here doing arbitrage? Because if you're doing arbitrage, that's a different lease, right? Arbitrage is when you lease a place, a fantastic, you lease a one bed, one house, and then put some partitions in there, and make more space in the house, and then sublease by the room. So that's arbitrage. You want to do arbitrage, and also can give you different class in arbitrage. No? Okay. So I'm happy that you learned today. Please get 15 minutes with me. I share the calendar. Evan, what would you say? You can unmute, you like, and ask me, because I like hearing people that not just talking about me. You're welcome, Beth. Average amount of time that it takes to manage a property. It depends. It depends. What is the, thank you, Elizabeth. Oh. It depends. What is the quality of the property? And how much maintenance you did beforehand. You know what I mean? If the property is falling apart and you are doing nothing and the property is falling apart and is, fully occupied, then you're going to get a lot of work. If the property is recently renovated, all the basics are really already taken care of, all the structural water, heating, electric, all is all really solid and taken care of. And then the maintenance will be minimum, minimum kitchen, minimum stuff. Then you can totally do it in like 2 hours a week. If that's, tops. If the property is in good shape. So those are very questions that go like this. It depends. Because the property is terrible, then everybody's going to call you about something different every day. So it depends on the property. I cannot give like a generalized, because I don't know the state of the property. Like, it takes forever. Who knows? It depends. You have a look at it like that way. I cannot see everybody for whatever reason. No. How much does cost to have a property manager? That depends on every state. Every state have different rules, and those rates are negotiable. One of my students was very, very smart, and then she hired a person part-time, and she paid a fixed amount, and then that was it. So it depends. It depends, and it's in every state, and it's all negotiable, always negotiable. I have one property manager just charge a fixed. Many property managers also charge a fixed amount, not in percentage, but in our fixed money. Like, I think one only is like $200 per property. I know one here that only is $50 per room or per property. So it depends. Always, and all is all negotiable. So again, I should have put that misconception number 6. That certain rates are never negotiable. Everything is negotiable. Everything is negotiable, but you need to decide what works for you in your state and think outside the box. Once you have a certain amount of properties, might be better just to train someone, if you have enough income coming and pay a fixed rate as you scale to that person. So it all depends. It's all based on the data, and everything is relative. So many people do 8. I see people do 10. I see people do 15. I see people do fixed amounts in person and also in cash. So it's all over the place. Okay. Well, that's say if you want to explore investment opportunities, if you want to explore investment opportunities in Florida, if you want to invest investment opportunities in ground-up construction, new construction like the one I showed, book a call with me. I'll show you what I have cooking in my table. You need to have at least $50,000 to begin with, I believe, with many of these operators and developers. If you want to own your own, I'm happy to make introductions for you. I want people to be successful, and I want people to understand the numbers really well. All these fears, again, are database fears, that not knowing what to do and listening to other people, not knowing what the experience was, and not knowing what the quality of the process for them was. I hope I've been clear. If you want to invest, happy to explain, happy to go. But I'm going to do, based on the questions that I have about property management, I should do a class only about property management, so you get to understand more about that. Would you like that? I guess you do. All right, everybody. What else you like to talk about? Before I leave, I want to thank you. Elizabeth, me, number 3, I work everywhere. I do right now, Texas, Florida, Massachusetts, very soon, Rhode Island and New Hampshire. So I'm looking for a developer in Tennessee. If you know developers in Tennessee, 100% Tennessee. There are many places, as long as the number works, the state really does not matter. I don't have anybody in Arizona. You want to work with me in Arizona, Elizabeth, let's do it. Evans, I'm going to share the link on Eventbrite once the event is ready. Please join my Facebook group. You guys will be the first to know, okay? Rod, let's go to Tennessee. Yes, let's go to Tennessee. Tennessee is tremendous for numbers. Possibly that is growing, absolutely insane. I'm looking for developers there. So yeah, no, if you know a developer, if you know purpose-built developers or just construction people, send them to me. We're interviewing right now. All right. Thank you, everybody. I think this was great. I know. It does not matter that it's expensive. It matters that the numbers make sense. And same for Massachusetts, because one thing overlaps the other. I'm happy to do numbers and a class based on data after that. But next Friday, we're going to talk about private money lending for co-living. Okay? Fantastic. Send it to me, Rod. Please book 15 minutes with me. I'm a Patriots fan. I'm a Gonzalez fan. Gonzalez is the Colombian player in the Pats that scored the last touchdown the last game. So I'm rooting for Gonzalez. I'm rooting for Bad Bunny. All right. All right, everybody. It was a pleasure to have you. I hope it was valuable for you. Let me know in the comments if this was valuable for you. I do this because I love it. I'm happy to get to know you even more. Book 15 minutes with me. You have specify consulting inquiries. And I'll see you next Friday. Bye-bye. Ciao.